أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. Gentlemen, my name is Ulam Sabri, and let me just introduce. This my host asked me to do that. Thank you very much for being here. And I am a stock investor, trader myself. I have my own fintech platform, which I developed myself. That's basically a software. I hope you can hear me very well. And through the software, mostly my community is Muslim community, so I focus most on halal investing. I also train people. So that's what the core of this stuff is. Just to give you a background, I'm basically a mechanical engineer, and I have worked at an oil and gas major for more than 2 decades, which is Chevron. For last 10 years, and this has been my passion ever since I was doing my MBA from University of Houston back in 1992. So I've been doing this thing for more than two decades, in fact, 3 decades almost. And the last 10 years, I've been doing it 100% of the time, developing software, analyzing stocks methods, trading methods, techniques, and obviously helping others as well. Just a disclaimer to start with, I'm not a licensed SEC registered financial advisor. So a lot of people come to me with their individual portfolios and they want to talk about their positions. And hey, we have this much stock, you should sell it here, buy this. No, unfortunately, that's out of my domain because only a licensed financial advisor is legally authorized to assess your financial and personal situation and then advise you specifically about your specific situation, that where to invest and where to not. What we are here is to just provide you general methods, what market is, what halal investing is, learning, education, systems, software, available avenues. And so is with the management of this mosque, Islamic Center of Prosper and Selina. They are also not responsible for any individual financial decisions that are made by any individual. So, and I have not been paid by them. Just want to make sure everyone knows it. And it's just a kind of a learning and education environment for public benefits. Okay. So should we continue or let's start? So when we say stock investing, so what are we talking about? Obviously, we talk about growing our wealth and investing with clarity. Now, as when you go through this, you will find some key features of our own software as well, which are like trend recognition indicators. My apologies. I am still struggling with the technology most of the time. Here, right here, and this is an AI-based system that we have, and also with the halal scaler, which built in 5,700 plus US stocks. Now, why do stock investment? That's a key question that come in everyone's. Okay. So three things you will inshallah take from here. Number one, the confidence to start investing in your stocks in the permissible way. Number two, a clear framework for screening halal compliant investments. And number three, practical tools to grow wealth patiently and prudently. Now, people ask that why stocks only? Obviously, there are different avenues, and stocks is one of those. Other avenues available are cryptos, for example, real estate, talking about in general, not halal, bonds, investments. And there are other investment business opportunities as well. So why just focus on stocks only? No, I'm not saying this is focus on invest. It's one of those. But in the US, especially this is one of the greatest investment vehicles available to the general public. It's easy for everyone to open an account with a broker. You cannot do it your own self. You have to have an account with a broker who is a member of stock exchange, and only he can buy and sell the shares on your behalf from the stock exchanges. Number two is liquidity. So when we say liquid, it's easy to get in and get out. And at times it only requires a mouse click. That's all it needs. So there are plus point as well as negative points. Plus point is that it's very quick. So you can get in and get out in seconds. And you can sold shares or buy stocks or sell shares immediately. No other investment vehicle provided this kind of flexibility and liquidity. Especially if you're going buy a real estate investment, sometimes it might take months for the process to complete. Then find a if you want to sell it to buyers at profit, you probably have to wait. Then another process of selling it. So the entire chain of real estate will take months at least, right? And there are obviously plus and minus and benefits and pros and cons of everything. So they are obviously for that investment as well. But for the people in US market, any idea anyone how many households in the US they are investing in US stock markets? Any idea? It is an estimate that more than 60% of US households have some sort of investment in US stock markets. It means at least one member of their household family member of each house, they participated in some way in US stock market, which is a very high number. The reason being the value and the size of United States stock market is the biggest one in the entire world. And there's no other stock exchange that comes very close by. I think someone is. So this is the best place to be high liquid and highly valuable, highly sought after in the entire world. And that's why investors and traders from all over the world, they prefer, if they can, to buy and sell stocks in US markets. And technology has made it easier for them. They can open an account here, they can go into the other part of the world, online, everything now. 30 years ago, 40 years ago, there was no online facility of trading or investing. Right now, everything is online. So it's quick. And that's why more and more people are inclining to come and explore this particular avenue. Moving on, why invest? So, number one, inflation eats cash. If you just park your cash somewhere, every year quietly it will lose 2 to 4% of its value. At one time in recent past, it was 6 to 8% as well, not long ago. But it will do nothing for you and erase its value by 2 to 4%. But investing in good avenues, it compounds. So the sooner you start, the less you need to contribute because time does the heavy lifting. I know people who have invested at good times in some companies and they have gone up by 1000%, 2000%. And that's possible. Not means that every stock will do the same thing. That's not possible and that won't happen. But there are opportunities as well. And future responsibilities. As you are young, you have less responsibility. If you grow older, you have family to take care of, home, married, children, aging parents, Hajj, retirement. Then you think after that, what I'm going to do the post retirement. Now, I have a mixed, diverse portfolio, diverse nature of customers, but many of my customers are in pre-retirement or post-retirement phase, and they are active, mashallah. So they are. Would you like sisters to come down here? The ladies to come there, if they can, because I have literature here. Can I tell them to come down? Sisters, if you can come down here in this room here, we have seating arrangements available downstairs, and you can come down and take a look at the projector screen from here as well. Thank you. Thanks for coming. Okay. So as the future responsibilities grow with you, your family grows, the children grows, Then you also start exploring the different possible ways of increasing your wealth so that you can take care of increasing expenses as well, especially during the retirement age. So saving protects you that what you already have. Investing is what makes it grow. Basically, what is a stock? I believe most of you know it already. Either they are doing it and they know. But just to have a refresher, a stock is a real partial ownership in a business. Now, some people they openly come and say that hey, it's kind of a gambling, but that's not the case. Not everything is gambling. Owning a piece of the stock company through a stock, for example, if three or four of us starts a partnership and we form a bakery, for example, and then we start making the bakery, either it makes loss or make profit, and we through its cash or profits, either it comes into our pocket or either we lose our share of our investment. That's exactly the stock is. The only situation is instead of the small business, which is between two or three people, now there are thousands and millions of investors, and they are owning a piece of that company. And in order to regulate that trading between the owners, they put it in an exchange so that it goes through some kind of an approved process and regulation. That's the only difference. Now, what people do, people start gambling on instead of investing in, people start gambling that hey, this stock will go up to from here to here. So they are not interested in investing the company itself or owning a share of the business. They are more interested in making quick money through that gamble, and that this is where the problem comes. What we are talking here is about investing long term, finding good stocks at good prices, and then move from onwards so that we make sure that we do not incur losses along the way. Okay. So publicly traded stock works identically, just like this example I shared of the bakery, just at a far bigger scale. Moving on, how does US stock market works? Basically, we are more focused about the two main exchanges. Well, number one is New York Stock Exchange, and the number two is NASDAQ, where shares changes hands electronically every day. Ticker symbols, every company has a ticker symbol, like Microsoft has MSFT, Amazon has AMZN, Google has Alphabet has Google, Nvidia is Nvidia, and we buy and sell shares through those ticker symbols. The market hours in our time zone are from 8:30 to 3 p.m. Although pre-market and post-market trading is available outside the exchanges, but that is not recommended for individual small retail investors, people like us, because there's less liquidity and exchanges are not there to monitor and control the trades. It is done between individuals and between companies to companies, traders, brokers to brokers. Okay. Should we allow questions here? I think we have time. We can, along the way, we can ask questions, but I know sometimes it takes a long time. So, yes, sir, you have a question?
A stock is listed on either of the exchanges, or could it be listed on?
It can be listed on many exchanges at one time. In fact, many stocks like AMD, they are Nvidia, they're listed on international exchanges as well, like in Hong Kong, in London, in Canada, in US.
In the US, but
In the US, generally, it will be only one to avoid confusion. Either it is a no. One second. I'm sorry about that. I take it back. Nasdaq stocks are also traded on S&P 500, but those are not exchanges. Nasdaq is exchange. New York Stock Exchange is either New York Stock Exchange or Nasdaq or MX. Now they have a Texas Stock Exchange as well, opening up in Dallas. On those four stock exchanges, stock is not duplicated. Nasdaq and S&P 500 are not stock exchanges; they are indexes. So one stock can appear in either of index. One is tech index, heavily Nasdaq is more like growth stock and tech, but the growth stock can also be traded on S&P 500 and others, which have basically a different mindset of people who are picking up those stocks. Okay, moving on. I did touch upon this very quickly earlier on. These are the different stocks, not besides stock, these are assets classes. For example, a stock is one of those. Its growth potential is high. It's a long-term basis, but people do it on the short term on a daily basis as well. Halal node is permissible if screened. There are many companies which are not engaged in halal activities. Their business is not according to our principles and values, like banking, like insurance, like tobacco, like entertainment industry, like Netflix. Many of us might have a subscription of Netflix as well, correct? But does not mean that it's halal. Most of its contents does not fall into halal category. So that we have to take care of. And there are halal screeners, and one of the screeners is available within our software as well, which helps on you on making these decisions. Another one is real estate, as we all know, is moderate to high growth potential. Halal loan is that avoid interest-based loans like mortgages. Similarly, mortgage companies, the companies which are involved in mortgaging and financing real estate, they are not halal to trade when it comes to stocks. Then, sorry, gold and silver in commodities, they are known as inflation hedge, and they have ever been halal store of value. Now, a benefit of gold and silver commodities in stock investing is that in reality we can have funds, and those are known as ETF, exchange traded funds. Those on our behalf will buy and sell gold and silver. So instead of going to the market, going to the Costco or jeweler, buy the gold or silver from there, bring it back here, keeping it somewhere and securing it, right? And then if you want to sell it, go back and sell it to the. Instead of physical commodities, you can buy ETF. And those will be exactly equal to the price of gold, copper, or silver, or whatever. And then you can buy and sell them immediately. So that's the liquidity part, which is beneficial when it comes to commodities trading like gold and silver. And those are traded on stock exchanges. Then comes with saving accounts. These obviously pay an interest, and that's why it's not halal. Very low growth potential. The banks pay hardly any saving accounts on banks these days, but it's not recommended. Then comes bonds, US Treasury bonds, conventional, low growth potential, but again, it's riba and interest, should be avoided. Then comes options. It's high in nature, it's speculative, it's questionable, high gharar, it means high speculation, and majority of scholars do not treat and allow options as a halal avenue. Any questions on options? Because I always get questions on options. I'm sorry, who's this? You? Options are, let's say I have some gold. Okay. In fact, gold fund, gold ETF. The price of gold is approximately $4,000 as of right now. Now, I say, okay, I think at 1 month from now, maybe 31st of August, the gold price will be 4,100. Okay. This brother comes to me and he say, no, the gold price will be 4,200. But in fact, he thought that he will be thinking that it might go up to at that time 44, 4,500. So if he can lock me on 4,100, let's say, he said, okay, at 31st of August or 30th of September, if it goes beyond 4,100, you have to sell it to me at 4,100. The idea is that he will buy at 41, and he's betting that the actual price at that time in future will be 43 or 44, 4,500. In order to lock this deal, he's going to pay me some premium contract between me and him. And I say, okay, fine, I will get that premium per ounce of gold which I have. So, for example, if I 100 ounce, I say, okay, per ounce you give me $5. It's $100, right? It's 4,000 and 4,100. I say it will not be 4,100. I will charge you $50 per ounce. So he agrees that he will pay me $50 for this difference. You understand what is the transaction? Now, here comes the time of the option expiration. 30th of August or 30th of September, whatever the time frame was agreed between me and him. At that time, the price went to 4,400. Now he will come to me, hey, I have a contract. I paid you the contract premium upfront, which is very low amount, $50, whatever, or $100. And here comes your 4,100. Now you have to hand over the gold to me. And now I will say, okay, but the market price is 4,400. So no, you entered into an agreement with me. I will be bound to give it back to him at 4,100, although the market price was 4,400. In reality, I will incur a loss of $300 minus the premium he gave to me. But he will go and make $300 in market minus the premium he paid to me. That will be his profit. That's option. On the flip side, let's say the gold slipped back to 3,900. Now, will this brother come to me at that time and say, I'm paying you 4,100 and give it to me? No. He said, okay, fine. I just bet and I lost. So what did he lose? The premium he paid. Right? I will keep my gold with me. If I want to sell it to 4,100, but he's not going to buy it. In other words, okay, that's the basic behind it. And there are different types of options. We are betting on a future price in a future date. And to lock that price, we are playing with a contract premium with each other. That's known as options. It's a complex thing, very not easy. Maybe I try to simplify those things. Problem is that we are betting on a future price. And the intent of the owner is that I do not want to sell it. And his intent is not, I don't want to buy it. He is betting on a price in future on for a certain date, which he does not own. That's the part known as gharar. And that's why scholars do not agree that it's halal. And it works both ways. He can also bet that it will drop down. So there is an option available that he will say, it will drop down to 3,500, I'll buy you from 3,500. Now, if I get extra money, I will say, okay, I'll send it to 3,500. I'll get some premium from him. Now, so there's several ways of playing with options. But the problem is that long term, I have not seen anyone making good money in options. The reason being, if these are all the option contractors, the money is not growing on trees, correct? It's coming out of people. If I win, someone else will lose. If he wins, I will lose. The net sum is zero. It's always zero. In terms of stocks, what happens? That a stock is based upon the intrinsic value of the asset. So if a company is doing good business, the world GDP is growing, correct? When the world GDP is growing, let's say 2 to 3% per annum, so the businesses are also growing. The businesses does not necessarily mean that one business is growing, then someone else will be losing. That's not the case because the entire pie is growing. Yesterday, US GDP, for example, might be, let's say, how much is this? 67 trillion per annum. Yes, few years ago, it might be 20 trillion ago, then 100 or 200 years ago, it was 1 trillion maybe. So has the entire economy taken out money of someone else's pocket? No. The entire world's GDP and the economy has been growing. And so the companies who are involved in doing actual businesses on ground, they are also growing their businesses. Yesterday, there was no Apple, there was no iPhone. There were just 40 years ago, there were no laptops or portable. Early 80s, the PCs became practical and popular. Late 70s, before that, there were no computers for everyone's use. Only big computers were available in 70s or 60s. So it means that so the businesses have grown and so have the stocks have grown. Simple as that. So that's why we are looking into the growth of the businesses, growth of the economy. In the options and other revenues, especially just like futures as well, we are betting on it. Okay. Hope I answered that question, although it was a long answer. Thank you. So let's move on if there are no further question at this point of time. So the power of compounding is that $200 per month invested. If you just set aside $200, the annual average return of market was 8%. For the last 5 years, has been 15 to 16%. I'm just talking about market funds. You do nothing, you don't buy any company. You go and buy, I will explain, a few market index fund, and you just invest in those. And those will be giving you an annual increase in their value of 16% while also paying you some dividend between 1 to 2%. If you just set aside $200 per month and keep on adding it, after 10 years, it can become 36,800, an average of 8%. But last 5 years has been 16%, double of that, if not more than double, because it's compounding. Similarly, up to a year of 38, it will become $300,000, and 48 will become $700,000 if you just start investing $200 per month at an average return of 8%. Now, we have been very conservative on average return of 8%. As I said, it's 16%. It's just not two times, it's compounding. It's much, much, much more than half. So it's the time to start. Start at 25 instead of 35 and 45, 55, and your final balance nearly triples. So waiting is the costliest mistake you can make. 60%, as I mentioned earlier, the US households have investment in the stock market. So why not you? Now, halal versus haram investment. I think we discussed this. Halal avenues are like ownership in real productive businesses. Businesses which have some intrinsic value, which have asset, which produce some good materials, some products, services, not which are involved in mortgages, financing, insurance, and banks, which are treated as Muslim scholars as not halal. Companies in halal industries like tech, healthcare, consumer goods, they are halal industries. But alcohol, gambling, tobacco, most entertainments are not halal. In our case, many of the defense companies are also treated as non-halal. But I have a different view of that. I'm not that strict, very honestly person. I say that even Muslims can make weapons. Why not? I mean, is it forbid for Muslims to make weapons? Haram? No. Then the business is halal. If you can sell the guns and you can sell arms and firearms and weapons, then the business of making them is also halal. But that's my view. Not everyone agree with that. The company should have a low debt to asset ratio. If the company is heavily debted, and debt ratio is more than a certain parameter which is given in certain standards, then it is treated as haram. But if it has a low debt ratio, like within 5% of their capital, like the company has $100 billion worth of capital and it has $5 billion in loans on it, then it's treated as halal. But it has more than that, it will not be treated as halal. It should have clear, transparent operations. So anyone can pick up the company's annual reports, which are available publicly, and can see that how the company does business, in which area they are growing, which area they are not growing. On the other hand, we have excessive debt or speculation. Companies like they invest in cryptocurrencies, which they don't do, they're just betting on it. Companies they are doing some taking on heavy loan to pay, and they're paying heavy interest to finance their growth. They will fall in this category. There is a famous hadith by Prophet ﷺ that the 2 feet of the son of Adam will not move on the day of judgment until he is asked about his wealth, how he earned it, and how he spent it. Tirmidhi 2417. So we would like to earn the money the right way because we will be held accountable for that. And that's why I always tell my children not to open any interest-based account. It's very easy to say the saving account. No, the saving is falling into this category. They are paying you a fixed interest, whether it's 1%, 2%, 3%. And that's what my understanding is. And I'm very clear on this. That's not halal. So moving on, any question on this? Okay. Halal is trading simplified. Now, there are thousands of stocks. So,
Yeah,
yes, sir, go ahead.
Like cryptocurrencies be considered you're not really like investing.
What's your name?
Ion.
Ayan, that's a very good question. Actually, and difficult as well. Crypto, they are mostly, why do people take crypto into, are they investing some business? What are they doing? Ask yourself, what are they doing? If they're not investing some business, like you go and buy Chevron's share, and Chevron has a gas station, Chevron has oil facility, Chevron has natural gas pipelines, and Chevron has rigs, and Chevron big takes the oil, fossil fuel, and blah blah blah. I'm sorry, actually I got to first Chevron, so it naturally came to my mind. What about cryptocurrency? You buy a meme coin, Trump coin, Dogecoin. What does it do? Nothing. That's the problem. Problem is that you buy it in anticipation that he will buy it at a higher price from you. And he is buying in anticipation that that brother will buy him from him at a much higher value. And this chain goes on. And ultimately, what happens? All of a sudden, people who were pushing it up, and they are always smart people, smart money, big funds, they will pull the rug, take their money out, and you will find big crashes in cryptocurrency. So that's just my problem. And recently, you have a fatwa from Mufti Taqi Usmani, then he declared that crypto is not halal. He declared all cryptos. There has been a recent development in that. But on the other hand, there is a group of investors, Muslim investors here in Dallas, and they have known as Bitcoin Majlis, I think his name. Someone has attended that name? Bitcoin Majlis. And they had a roadshow, and they claim that they have fatwas of their scholars, whoever they are, I don't know personally them, and they think it's halal as far as Bitcoin is concerned. And they are also having the same kind of roadshow in London in October. So they have their own arguments, and they have their, so it's a kind of an argument debate. I would say there's a difference of opinion on that. I would say that if you want to invest in Bitcoin, the limit in crypto, the limit to only those one or two which are also accepted in certain countries as currencies. Like Bitcoin is being accepted, and sooner or later it will come to more countries as a formal currency. That could give us a relevance, right? Just like dollar note, rupee note, a dollar note, or euro note. But others, they are mostly gambling. They're just there to speculation. So maybe the Bitcoin and Ethereum, they are two which I to look into it, but I normally don't recommend because they are highly, highly volatile by nature. It's not for everyone's. Okay. So I don't have a very clear answer. There's a fatwa that goes against it, and there are people who are buying it, and they are both Muslim groups. So I cannot tell you exactly, or I fall towards the people personally who avoid it. Personally, I also don't have very good experience with Bitcoin, very honestly. Okay. Now, halal friendly vehicles, I mentioned these are the ETS available, which are beginner friendly right here. Like if you want to invest in the major SPUS, SPY fund, instead of that, SPUS is a halal version of that. And there are many like Amana funds, like SPSX, SP funds, like this SHB, iShares, MSI Islamic Fund, and this Halal Wahid Sharia compliant. These are the index funds which are giving you because the market is good. So the S&P 500 for last several years have given you 15%. This has already always been beating them for last 5, 6, 7 years, ever since it was introduced. Why not look into this? But instead of just not doing it, maybe you can pick a few of them and start doing that. If you want to go to a higher level of you want to invest yourself instead of leaving it to the funds manager of these funds, ETFs, you can take a look at several companies like GLD is the gold fund, as I mentioned earlier. Companies like Nvidia, Micron, Apple, sorry, this is mistake, is AVGO, Broadcom, AVGO. All these companies are halal by nature of their business, and they have been continuously evaluated. For example, Broadcom makes chips, Micron makes semiconductors, Apple, as you know, makes computers and iPads and iPhones. And gold ETF is simply a proxy for gold's physical gold. Any question on that?
What's your viewpoint let's say, if you go back to some of those funds, some of them, for example, if you take a, I would say, let's say Amna would not have an Apple stock in their portfolio because the argument is that they hold a lot of government bonds and so there's interest in, 5, 6%, whatever.
They have certain scholars on their boards, and they have a certification of halal. So it's not my responsibility or your responsibility. It's the board's responsibility, because they are having a fatwas on that. Okay, and they regularly review their positions and guide them. So when there is a certified mufti or scholars come into play, I'm not going to challenge them. I could have a different opinion, like on defense stocks, I have a different opinion. That's my personal opinion, just purely defense stock, but not on other matters. Now, they have different parameters and they have different standards. Now, there's no universal standard. So one set of board, a group of board members for a particular ETF could differ in opinion from another group. And it's possible, just like there are different point of view when it comes to even different Islamic perspective as well, right? So same is here, there are different perspectives. But it's not a big difference. Could be minor differences when it comes to being halal. Okay. It's not difficult to open a brokerage account, especially in US. You need to choose a broker. They are very good brokers, and right now everything is available on mobile phone apps. Popular commission-free options include Fidelity, Schwab, Vanguard, Robinhood, Webull. I personally use Interactive Brokers and E-Trade, which is owned by now Morgan Stanley. They'll be needing that you need to be a legal resident as a minimum or a US citizen. Sometimes in some brokers, they have the flexibility. They also open the cases for broker account for people who are here on L1 visa or L2 visa, but you have to show that you are legally here. Most of the brokers, as far as I know, they have become strict and they have restricted only to citizens and green card holders. You need to fund the account through your bank, and then just start trading. Search the tracker, enter your share quantity, and choose a market or limit. Now, in the past, there were brokers who used to charge a hefty commission. Right now, it's commission free. So take advantage of that. If you buy and sell stocks, there should not be any commission on that. If someone is charging you, he is ripping you off. All these major brokers, they are not charging you anything. You have any questions? Okay, thank you. Now, choosing the right account. One is the main taxable brokerage account, which is a normal account. Anyone can open an account, provided he or she meets the requirement of the broker. Flexible, you can withdraw anytime, and your capital gains are taxed yearly. There are two types of capital gains: short-term and long-terms. Long-term is always taken as 1 year in beyond. If you buy a stock, sell it after 1 year of holding, you pay around 18% of capital. If you sell before that, then it's going to be your income tax bracket. So your tax advisor will be in a better position, especially if you are involved in short-term trading, day trading, because you will frequently coming in and out. And sometimes there are other rules like wash sale rule, which can affect your profitability at the end of the year. So you have to discuss it with your tax advisor if you are interested, especially in the day trading and short-term trading. Then the Roth IRA and traditional IRA. There are two types of investment retirement accounts, individual retirement accounts, sorry. And those IRAs are the basic difference is that one is directed more towards the young population, which is Roth IRA. The other one is traditional IRA. The Roth IRA, you pay the tax upfront on your investment and then put the money on the Roth IRA with certain limits. There's a $7,000 year per limit. Income limits also apply. We fall into a high bracket of income, then there's certain limits. The lower income brackets, certain limits. Traditional IRA differs that you can put your money up to a certain limit. You cannot put unlimited account on that. In the traditional IRA, and you can defer the tax payments till the time when you withdraw those contributions. And after a certain year age, if you withdraw it, let's say in 64 years of age or 54 years of age, then you will pay the tax of that time. Again, your personal tax advisor will be in a better position to assess your financial position, your financial goals, and then guide you. Okay, for you, taxable brokerage account is better, or Roth IRA or traditional IRA. Then there are 401k. Everyone who is employed, normally the employer matches the amount which you put in their 401k account, and those are managed by a firm like Fidelity or Schwab or someone else on their behalf. And they take a portion of your profits or fees every year. Now, many employers, I think almost all employers, they allow the employees to take out their 401k fund and manage it themselves rather than leaving it to someone else. And in many cases, like in Merrill Lynch, I know, Fidelity, I know, you can request your fund manager through the 401k benefits manager, your company, that you want to focus on halal investment avenues only. So they will try to focus on halal avenues only. This is also now available. Previously, it was not, but it's not available in each and every case. And sometimes they say that they would come to you. They say that there are not many avenues available for you when it comes to halal. So these options are available. You can explore it with your funds manager. And I would say that one note here, the default there are money market funds available in IRAs, and those are interest bearing. When it comes to money market, means they're interest bearing. Instead of them, choose halal funds, which I mentioned here. Building your first portfolio. So if you are new here, then you should also understand the value of diversification. They should spread across 8 to 15 quality names or single halal ETF to lower your risk. Even the big companies sometimes take a big hit. Just for example, on Friday, Apple took a hit of 8 or 9%, which is unusual, very high unusual. I myself, by the way, have Apple stock. So I don't recall that Apple had this kind of pullback besides this, COVID or once before. Or that's a surprise. But anyway, this happens. Previously, a week ago, it was IBM, and that week ago, it was Google. The big companies also hit, they can have it. So, in order to limit your risk, you have to diversify a bit. So, my suggestion is that cap any single stock at 10% of your portfolio, especially while you are learning, you're new. And rebalance every year. Revisit your allocation annually. Trim what is grown too large and add to what is lagged. In other words, terms of percentage, not in terms of in terms of return. A simple starting mix is 70% to start with halal ETF and 30% individual stocks you have researched yourself. Don't buy on tips given by anyone. This is where the trouble comes. Someone tells you, hey, buy that stock. It's going to go skyrocket. Fine. What if it comes down? Then someone told me, then I told him, a good friend to mine. And this happens all the time. Just a few days ago, one of my customers called me. He said that someone in my group of customers advised him that silver was doing very well. Although I was telling people not to buy silver. I have bought silver and it has come down by so much amount. I have lost $50,000. What should I do? I said, now, what can I tell you? Should I tell you to hold it? My personal recommendation to people or my customers or my friend, never take more than 8 to 10% of loss on one trade. Simple. Unless it's something which is a long-term stock like Apple or maybe Microsoft or maybe Nvidia, something in which you have conviction in their business, their very fundamentals, their earning, their growth. You know it very well. Then it's different story. Otherwise, don't go for it. And this is a very important principle. Stop loss, cut your stop. Why? I think I will come back to it later on as well. Here, risk is known as risk management. So first of all, never invest money you need soon. You should always have some kind of an emergency fund first, and you should always invest from the money which you can afford to lose. If you lose it or a big chunk of it, it should not disrupt your or disturb your financial well-being. You can afford to lose in at a certain level and cut your losses earlier. As I said, if a position drop 8 to 10% below your entry price, it means that the investment theme is out of window. Small losses are recoverable, large ones are not. I just give you an example. How many of you know Hertz rental company? Hertz, Dollar, Thrifty. Almost everyone. Everyone knows, right? It's a big company. They have operations almost in every city, every airport, every place. You know what? I just took a rental car from Hertz. That's why it came to my mind. And I came here. And I said, okay, a customer came to me just today. After I took that, how about Hertz stock? I want to buy something. Give me some advice. I said, Hertz, okay. It has never come to my radar. And I look at its performance. 5 years ago, how, by the way, Hertz today's stock price is, anyone knows? $1.50. Today's stock price is $1.50. And how much it was 5 years ago?
$24.
5 years. Anyone? 46. So for last 5 years, it has lost 97% of its value. Although the company is there, it's very well known. Everyone knows Hertz, Dollar, and Thrifty Rental. They're one company now. And so let's say last 5 years ago, someone bought at 46 on a tip. Right now, how much it would have be reduced to? 46 divided by 97%, something around 75 cents. So if you invested last 5 years ago, let's say you invested $100 in a Hertz share, right now it should have been 97 for $3. How would you feel emotionally and psychologically when you see $100 become after 5 years $3? It can really give you a heart attack. That happens. Now, along the way, whenever it was coming down, people say it was 46, now it's 24. It's half the value. It's cheap. Go and buy it. People just jump into it and buy it. But it kept on falling and falling and falling until right now it's $1.50. And every time I see people do this mistake, when something is falling, they say, okay, fine, it's falling. It become cheap relative to what it was 2 years ago, 1 year ago, 3 months ago, fine. What is stopping it from falling further down? That nobody knows. Nobody bother to think about. If something can come from 46 to $1.50, especially this big company, well-known company, big company is a well-known company. During the same period, 5 years, market has grown 120%. If you do nothing else, put your money in a market fund, this S&P 500, SP, then your money, $100 would have become $220. But if you had invested in Hertz, it would have become $3. So that's the problem, that if you don't cut your losses earlier, you start living on hope. It will come back. Or let's double down it. Let's buy more so that my average will come down. Then it further come down, so put some more on into it. Average will come down. Until one day you realize that your average has gone down to $5. One more example before we move on. Bank of America, big bank, still second or third bank of the United States, right? In 2008 recession, big recession, it was $70. Correct? Recession came, Great Recession, and it came down. Does anyone know that where did it stop eventually? In just 1 year? Anyone? Any idea? $3. And along the way, same phenomena was happening. When it was $60, when it was $50, people were jumping, and it's become cheap. Or it will come back one day. Oh, okay, it will come back. When? Nobody knows. So, so investment decisions are not made on these kind of hopes and expectations and tips given by others. They are done through thorough research, analysis. Even then, even then, if you are able to make good profitable trades 55 to 60% of time, you will be a winner. It means 30 to 40% trades will always go into losses. That's why it's very important to cut your losses earlier, only 8 to 10%. Another important thing is avoid borrowing to invest. There are margin accounts and interest-based borrowing, they add real danger. Only invest capital you already own and you can afford. Just last week ended on this Friday, yesterday. There's a hedge fund which was heavily invested in AI and cryptocurrencies. And it went bankrupt because they borrowed a lot of money from people, from their uh, loan providers, banks, and others, and they went bust and they had to close their shop. And the people who were the owners of them now they are receiving margin calls because the people who have the funds and institutions who have given them money, billions of dollars, they are after their money. They want their initial capital back. So I don't know, God knows how they will do it. But for individuals, it could be catastrophic for you, for me, for others. So be sure to manage your risk. If you don't know, don't get into it. If you want to know, go to the people, start first, learn how to manage your risk so that you will hear these stories everywhere. Probably you will hear success stories very often. If, for example, one brother makes a huge amount of money, he will go and tell several of his friends. But if the other brother loses a good amount of money, he or she probably won't go and tell others because you see, I will feel like a stupid idiot. Everyone is making money, I lost money. People want to be on the winning side, right? So that's why you will not find losing stories a lot, but people do lose a lot of money. So please make sure that you understand the basics of risk management. If you don't, increase your. How do we reduce this thing? Okay. Finally, I'm catching up with technology. Thank you. There's so many things to learn that I'm becoming old-fashioned, very honestly. Okay, long-term versus trading. There's one method of doing is long-term investing, which is recommended for beginner. By the way, I'm myself a long-term investor. And then another is active trading, which requires more time, skills on almost daily basis. Now, I unfortunately have more customers on active side. Everyone wants to make money in stock very quickly. They want tips, which I hate. They want stocks which can move tomorrow. If they buy it today, they can tomorrow by 8 or 10%. They want not by tomorrow, then within a week. They don't look at the broader long-term picture. Unfortunately, stock is just like another business. You have to go into the long-term things if you want to be in profitable long-term investing. Don't go on the tips and short-term methods and studies. No, go for the long-term only. Hold long-term are those, especially for beginners. If you don't know much, you can hold positions for years, not days. Even if they come down, the history tells you that these companies are solid in their business, their fundamentals, their customers are loyal. So they eventually will find another strategy and their businesses will come back. There are companies like that. They have gone into some hole number of times, IBM and even Microsoft and even Apple at that one time. They have come back, reviving their businesses and reviving their so are their stocks. Instead of putting something like in Hertz, which has lost 97% in last 5 years. And I don't know why. I don't want to bother waste my time in investing it because it is not on my radar. Simple as that. Buy quality businesses, tune out daily noise. There will always be daily noise that Mr. Trump has made some this to it and that to it. If something is going to happen, heaven is going to fall upon us, and this thing has happened is happening in Asia and there and wheresoever. But you need to understand the quality of the business, the worth of the business, and invest there. That will bring lower stress and lower taxes to you. Time plus patience is compounding. Okay, on the Active trading sides, it demands real technical analysis skills, charting skills, technical skills, understanding of the market, understanding of the companies, and other things as well. Position held for weeks, months, not years. I'm talking about weeks. People just wanted days, even hours and minutes. Yesterday, one customer sent me a message. "Yeah, I want to day trade for certain stock. What is the good price?" I said, "You want to have a day trade, means you want to buy it and sell it, and you want me to tell you a good price for that. By the time I will tell you, you will realize, if you go to make the trade, it will already be gone. Day trade is not something like that. I can tell you a fixed price. The day can it can move anywhere. So day trading is not done like that. Everything is done in different fashion. And then the short-term gains will also lead to higher level of taxes. Most beginners lose money attempting day trading or swing trading, in my experience. If you want to be a good, you have some certain source of income, focus on long-term investing. Focus on value of the business. Now, how to pick the right stock? First of all, I told you the right stock, there are four filters. Number one is strong fundamentals. Are they growing their revenues, earnings, and cash flow? If a company is growing their revenue, their earning, and the cash flow, market will notice it. Even if it can ignore it for some time, for some reason, it will notice it. And before you know, market will start pumping it up. It should be a leader in a leading group. Every company or every business in a certain group. Apple is in a computer hardware group. Microsoft is in a software group. Micron is in a semiconductor group. And similarly, healthcare stock like company like FV or Pfizer, they are in a pharmaceutical group. You need to, there are 97 or 100 plus groups, right? As of right now. We need to have a mechanism or system that we should know which groups are leading at the moment and the long term, just not for a few days. And among those groups, which are leading stocks, those are the stocks where you should focus rather than focusing on beaten down stocks in beaten down groups. This is what the people do mistakes. They think the stock has come down, it's cheap, but the entire group is weak. And when the entire group is weak, it will pull down the basket of stocks along with it. That is an issue. So you need job is to find leading stocks in leading group, top stock in top sector, and strong relative strength with the broader market. If the market is performing here, relatively stronger stocks should be performing here, going up. It should be supported by institutions, means big funds, banks, big guys like Morgan Stanley, and their methods and techniques. They won't tell you. If you go and watch CBNC, they will probably tell you the opposite what they are going to do because they want to misguide the market. This stock will go up. They like this and that because what probably they were trying to pull it down and buy it at a better price. So there are methods and systems which you need to understand where the institutional money is going. These are the four filters. And then stocks break out from a base. Every good stock, they're not just going up. And for example, this is MU, okay, Micron. And this is a few weeks old. Micron has come down from there. Every time when Micron comes like this, it forms a consolidation or a base. This is known as a base, a tight pattern. And when it breaks out, then it will make a major jump. It breaks out from this small base, which is because the scale is too large here. This small base, this is its buy point, and this is its sell point. So, for example, if you have a system which tells you about this is the buy point, and for example, I mentioned that we have a proprietary indicator which gives this green zone. It's known as trend recognition indicator. So, this is the point you should be buying. Below the base, you should be a stop loss. This gives you a high reward to risk trade. This is the point you should be buying with this stop loss. Anytime when Micron does this, it can give you a big move, a big jump in a very short period of time. We will not buy something like which is falling in this red zone coming down here, we should buy here. Especially in case of a weak stock like hers, because fundamentals are not there. History is not there, which is supporting us. Okay? So either we break out of a base or we buy at a pullback on a strong support. So in case of we given a stock strategy history, we know this is a strong support. It will find support here, and most likely it will come back. This is the need. So that for that you need certain level of analysis and method and knowledge to analyze stocks. All right. Any question on this? So, for example, again the market line. Now it's basically a clear chart as I wanted to show it. This is February. So during the month of February and March, if you see Micron came from 400 to only 387 to it lost not more than 20% or 30%. While the entire market was very down because of the Middle East war, which erupted during late February here in this area. Along with the market, it came, but when the news came, it was relatively strong. It came out of this base, and then from 410 to it gave you a rise ultimately to 1200, which is more than 300%, approximately 300% in just a few months. So if you have a system and the guidance to guide you that where the right buy point is and where the stock is in a good trend to buy at the right time, then you will be successful. Otherwise, you will be putting your money on a wrong stock like Hertz. And I don't want the company to go bankrupt, very honestly, because I always rent my car from them. But unfortunately, it happens. It's beyond my control. The company is not doing very well. That's why their stock has lost 97% of their value. Anyway, we need to understand the supports and basis information, and along with that's how we decide where to find the good stocks. In this case, it was Micron, which just a few days ago, till the month of May, from the March to May, it gave 300% return. What we need to do, we need to understand this move, whether it's a good support coming out of a base, two things only, coming out of a base or at a good support. And then analyzing its relative strength, its formation, is fundamental in business, then we put our money over there. Unless you start doing this, you won't be successful. Otherwise, you will be just flowing and working on the tips given by somebody else who even doesn't know where the tip has come from and why the tip has come from. Okay? Any question?
How do you determine factors for a base? Like, what is the base? Like, how long is the?
There are different methods. There's no one single answer to it. Normally, the base is a tight compression like this area, in a tight range. It goes up, down, goes up, down. Whenever it comes to a good, strong, like this red line, this is a moving average. You see, it is following this red line. One touch right here. Second test, third test, fourth is went there, fifth. Then eventually, when the war started, everything was going on, right? So it fell back, then it came down. Now you know from the history of the stock that it has again moving up beyond this moving average, which has been a very strong support for this stock. So you need to develop your charting skills. Charting skills means you need to understand what chart is telling you, what price is telling you. Everything that happens to a stock will eventually come to its chart sooner or later. Charts cannot lie because it's actually coming from the visual graph and the data. And the graph and data don't lie to you. So here we have a base in front of us, right? It broke down because of the war. As soon as the war finishes, we knew it was strong. It came, it jumped, and never looked back. And when it came beyond this red line again, that was our entry. Simple as that. In the previous chart, this was here. As soon as the green zone starts, came down during the war. It moved past this, and this is the green zone that our signal generated. This is our stop loss, and boom. Now, before that boom, we understand its microns. What are the fundamentals of the micron? Why is this driving? We are not expecting this move. Nobody knows what is going to happen in the future except Allah. That's our faith is. Simple as that. We can analyze, we can think, we can put our learning into the play, and then we can take a decision and leave the rest to God Almighty. So why Micron was okay? Micron's earning this year, this is year 2025, and this is 2026. This year's Micron's profit and earning will likely exceed the past 35 years of profits combined together. See the jump? This year, I repeat, the total profit will be greater than the sum of all the profits the company earned during last 35 years. So that was the growth factor, the fundamental, the business factor, which was driving it. And going forward into this, we already know that. So it was just a matter of time. Correct? It was a matter of time when it will come out and bounce back. Okay, it cannot live just like Hertz. Again, sorry about Hertz, if it's Hertz employee here. It cannot live forever with this kind of earning. How can a company that grows its earnings with this magnitude and scale can see its stock dropping down to the bottom? Market will not ignore it. They will reward it. Unfortunately, at that time, it was shunning the stocks overall because of the uncertainty in the Middle East and the war. Once we went through that phase, it was ready to make a jump. And that's why we made an entry there. So this is what we want. We want our money to go to the right place at the right time, instead of just here and there based on some tips that this will go up, this will go down, and this and that. One of my customer last year, he told me that there is a company in Houston, it was Lunar Machine. It's a space company, LUNR. He said there's tremendous potential. I said there is a tremendous potential, but there's a tremendous risk as well. It can come down and up and down in 40-50% in matter of 2-3 days. Can you take that risk? He said, I can take that risk. I have an extra money. It's your call. I cannot take that risk. My own personal. I will not advise any person to do that. Now he was lucky. It was around $12 he bought. It came went all the way to $30. Now he came to me and said, what's your analysis telling me? It went from $12 to $30. I said, fine. You're lucky, fine. But you don't know exactly what the company, you just heard from someone. You know what today's price? Again, less than $10. So most of the us, if you're working hard people, you're professionals, you are saving, you cannot put your money in places like this. If they can go 50% in 2-3 days or 5 days, they can also come down 50 days as well. We need to avoid those situations, right? So you want to have this kind of solid businesses, which has solid earnings, solid fundamentals behind their businesses, which can support this line, this kind of growth. Okay. So common beginner's mistakes, avoid these. Acting on hot tips, I just explained, from social media or the family or WhatsApp group. Panic selling at the bottom, at the moment, headlines trend is scary. Now, many institutional funds, what they do, they create panic sometimes about a given stock. Because they want to pull it down, especially for something like Nvidia or semiconductor. They say it's too high. Now, they have their institutions and the institutional clients with them, with Vanguard, with Schwab, with Fidelity, and they have muscles, financial muscles. They can bring the prices up and they bring it down. They create panic only so that the weaker hearted people or individual retail stuff, they can start panicking, start selling the stocks so that they can buy it at a better price. This has always been their strategy. And they can also create artificial demand, unfortunately, to jack up the prices of a stock to some certain level. There's no unlimited supply of the funds, so they cannot do it indefinitely. Our job as professionals and guiding people or analysis is to understand, is it a real sell or is it just a panic being created? Like in case of Micron, it's not a real sell. With this kind of earning, it's again come down very honestly, very sharply. With this kind of earning, there is no way that it can, unless the earning comes down, that it will remain depressed. No, it won't happen. It's just a panic selling has been artificially created so that the prices will come down to a reasonable level. refreshing your portfolio 10 times a day. People just, when you have money, sometimes you make money very easy way. You don't have anything else to do. Just open your app on your mobile phone and start taking a look at it, and then start taking some decisions. Don't do that. If you're in a you're a long-term investor, you're in a long-term haul, let it be there for some time. If you don't have that conviction, don't buy that stock. Buying out of FOMO, fear of missing out. After a stock has already run up 50% plus, we've probably run out of time. A customer, she called me yesterday. I'm sending a message. I want to discuss my Sandisk. I bought it at $2,000. Right now it's 1,000. What should I do? No, what should I have said to her? I said, I've been telling you this don't get out of this, come out of this FOMO. It was too extended. It was about to come down. It increased by 1,200% in 1 year. There is no way that it can remain at that level. It has to come down. Our job is to find that level where it ultimately stops. If there's fundamentals business are strong, I only say that I can only pray for you if you come back. But it will not come to 2000 level again in the near future. It will not come to it will bounce back. It has already bounced, it will bounce back. So that you can cut your losses. So she asked that if I can sell it everything right now, but I already have $50,000-$70,000 loss. She said, don't tell me what is your loss. That's not my domain. I cannot tell you personally. But I can tell you that it will not remain at this level. It will come down, but it's not going to touch the 2000 immediately. It might take years now. The money is not growing on trees, right? So don't get caught by this FOMO. Again, no plan, sticking the stock, no strategy behind, and betting all your saving in one sure thing is stocks. No, diversification is important. Last one is very important. No sell, lose, or exit strategy. It's easy to click a mouse, get into it, and to buy a stock, but it's very difficult to understand when to sell it. If you don't know it, ask the people who do it. Like this is our YouTube channel. I'm just right there. We have a whole presentation on the selling rules and exit strategies. Go and check that out, and you will find. I think this session was held in May this year. I think this is very relevant. But you should understand when to buy and also when to sell and how much to sell. Each of these mistakes has a real cost. Spot the pattern and choose differently. Okay. Habits of successful investor. They are patient. They understand wealth compounds over decades, not weeks. They always learn. They are not in a hurry. They are disciplined. They hold the line with others when others panic. They are grateful. They see wealth as a means, not an end. They have certain plans, right? Follow clear predefined rules for buying and selling, and they're community minded. They pay zakat on that. They support their family and the ummah. They're not there to just make money for themselves. That's not the intent. All right. I just wanted to, because we're getting close to the Maghrib time. Any questions on this? Yes, sir. I'm sorry, what's your name? Can you please? Yusuf. Yes, brother Yusuf.
What kind of stock should they buy for, getting income? Because they are now coming to a point where
Again, it depends upon your personal financial situation. What were your financial goals? Have you achieved those? Let's say you are not retired or getting close to retirement, but you have a chunk of amount and you will be retired from your company, so the 401k will be transferred to you, right? The fund manager will not fund it to you. I would say you talk to your financial advisor, sit down with him or her, and this is the money I have. These are my goals from now onwards. He or she will prescribe a plan for you that put this much money. I would say go for index fund if you don't know about stocks. But don't put 100% of your money, whatever is the amount, in one or two index funds. Even if you just follow the market and market has been doing well, it comes down temporarily, like it has done last week. It again comes back. Inshallah, this thing will continue to happen, especially if we have an administration who's trying to pump up the markets and they cannot afford the market to come down. They want to make billions out of it, unfortunately. So for some years, I would say target index fund if you don't know much about the stocks. So that even if certain value of that fund comes down, you don't lose a lot.
My
But
point was, how do we get, because they are looking like, for example, myself, right, if I retire, I'm looking for monthly income.
index fund will also can also
How do
give.
stocks give you monthly income? They only, I mean, they seem to be going more towards the growth.
There are many dividend players as well, but the dividend play is less. And there are some very good dividend players, like Chevron pays around 4%. IBM right now is
you
67.
run the light.
Yeah, please go ahead. Go ahead.
And
They are index fund also pay dividend. as well. Unfortunately, most of the income players, they are also involved in some kind of a non-halal element. Yeah, that's an issue. That is why if you just focus on the dividend income, mostly will land into non-halal. That's an issue. You have to be very careful on that. Because we are not like other retirees or other non-Muslim, but we don't care about that. If we are caring about the halal, then we need. Now, in your case, or someone else's case who is close to retirement, again, it's very important to set their financial, and you have to sit down with your financial advisor. Because, for example, let's say we have 100K amount or 200K, whatever. If you have 200K amount, out of that 200K, how much you can afford to lose? Number one, how much you want to be in index fund, and how much he probably will come to you say put those in bonds and others, which obviously we will not like it, right? So I would say index fund is one way to go. There are a list of funds that I provided. Otherwise, that's more kind of secured area. Besides that, certain port you can take certain risk on. Let's say you have 200K, so you say, okay, on 25K, 25% of that, which is 50K, 50K, I will handle it myself in some good stock, long-term stocks again. Rest, I would say, index fund, rest in some other avenues, maybe some properties, real estate, which can give you income through rent.
there are index funds or other funds that do that, like you.
They do that.
The income based on real estate.
Yes, they are. But not unfortunately, not in the real estate area, not many halal area. There are. Okay. Any other question?
So speaking of 401k, a lot of employers in the US say,
What's your name? I'm sorry, can you
my name is Zach.
Zen?
Yeah,
Yes, Zen.
a lot of companies offer this employer match for 401ks, and we have investment, but a vast majority, whether it's Charles Schwab or Vanguard or whoever is managing that fund, will not give you the flexibility to invest in a Sharia compliant index or anything that's compliant with.
These days, many do. I know about Merrill Lynch, they do. I know, I think about Fidelity, they do. The big guys. Not everyone do, you're right. Many do. You always have the flexibility. If they don't do it for you, you can think, okay, I will manage it myself. You can take out the funds.
Many companies don't.
Yeah.
They have their own set of list of funds. My company allows it. I can set up my own brokerage link account. That's what Fidelity calls it. But many companies.
Are you sure? I think most companies, as far as your company does
It's
not
the
know
other
that.
way around. It's the other way around. Few companies allow it. Most companies have their set of funds, and you have to invest in companies.
But when you manage, you get an option to manage your.
Manage means what? You can only buy and sell on those funds.
You can select low risk, medium risk, or
Those
high risk.
funds are not Sharia compliant. That is the whole problem.
We have to further look into that, very honestly. Yes, sir.
They're not like for 401k, if someone is having Fidelity, they can ask them that I want to transfer some specific amount to traditional IRA. So in traditional IRA, you can manage yourself.
Right, but most of these investment funds, they don't allow that. They say you have an option of low risk.
They allow. Fidelity Schwab about 75%.
I
It's
think
not a question of the
I
fund.
think
It's a question of your company's 401k policy.
right.
Any company that runs it, it allows up to 30.
No.
Yes.
I checked this out.
I have been running like very specific,
What time is Maghrib here?
extremely specific.
Normally, time is 30. No, that's the comma time. What exactly the time you should stop? 4 more minutes? Okay. And any other question in 4 more minutes?
Let's say when the power market is not in the power trend.
Okay.
What's your strategy for position sizing?
First of all, if it's not a power trend, we don't know whether it's come down or it's just a temporary phase, number one. But from the history and from the different method, we can have a good estimate of that. So, for example, right now, it's not a power trend, but the market cannot remain in a power trend always. How it is possible? And then everyone will become millionaire or billionaire, right? It's not possible. So we know that the long-term market is not in a downward. Number one, it's not in 2008, 2009. Yes, there will be issues. There will be time that it will come down, balance itself, and then move back. Number one. Number two, at those times, we look for leading stocks and leading groups, relative strength. We want to create and watch certain watch list of our own stocks which are leading stocks in leading industry groups. In other words, like Macron, I was showing that it was not going anywhere, and its earning was growing. So we knew it will bounce back as soon as the market picks up. It will jump. So we need to target those. This is what we do.
Can you change your position sizing?
Of course, you reduce your exposure. You reduce your exposure to, if you have, for example, 50%, you bring it to 50% cash. For the long term, normally it does not apply. But not everything is in long term, for medium and short. Okay? Yes, good.
So is that near Adam?
Say again?
Sanders.
What happened to it?
Is that near Adam? Why is it very? It went by 2300, now it's 12.
I know. I just explained that a lady called me, my customer, and she asked me that I bought it 2000. What should I do? I said, why did you buy it? I never said, did you buy it? Anyway, can I do? So what's the question? What should we do about it?
Why is the question, is it relatively good company? Is it?
No. Look. I explained it last year. It was introduced. It's a new company, just 2 years old. Not even 2 years old. Last year,
Western Digital.
It was Western different. It's still there. It's a different company, Sanders. Now, in 1 year, how much they have grown the price? No, from where?
From $130.
$32. So how much is the total rate of increase? Whatever it is, in thousands. I think it's around 2000. So it's natural that it will give back. People will take profit. It cannot go like this. It is natural it will give. Any stock which had this climax run will come like this. Any stock. It's just not about a stock, it's anything. It's a universal principle. Anything which goes like this. Yes, sister.
Then, split and the portion like split by one part is equal to 5. So what is that kind of behavior of that?
That's not a behavior. That's the
Like Amazon.
sister. What happens? The management decides it's not easy for people to trade our stock. It's a big. They said, okay, every stock, let's say it was 2000. Instead of one stock, everyone will have 5 stocks. So the price will be divided by 5. It any stock which has a climax run, it will go like.
Coming back, there's
There are actually we run out of time. I can explain it to you. We have different systems. This comes with experience. First of all, you believe me, any stock which will do this kind of behavior will give back certain portion of it. Number one. Will it come back to all 32? Not necessarily. That won't happen. If it is some value, it has some business. At that time, it's our job as professionals to understand through the chart, through technology, through the fundamental, to understand and realize where it is going to make a bottom or probably like a support. But anything which moves like this, chasing it at higher prices would kill yourself. You'll kill yourself. Okay? Sorry, but it's not something that's very simple to answer. You have to learn some technical skills, you have to learn some charting skills, then you probably will realize it. Let me finish it off. I think it's time for Maghrib.
Yeah.
Yeah, thank you very much. I hope you